I mean, where would you short this off this chart? And then where would you stop?
I would short run about 220, but then it becomes a question of size, and so I would be I'd be 220, but with reservations that that these gyrations can be wild, and so 220 can't be allowed to kill me because, like I said, it could maybe trade 250. So I'd be 220, and if it turns at 220 and it starts going lower, maybe I'd add to it. But I would also, if at 220, I'd want the opportunity to add to the short at 250. So 220 would be an initial staging post, which then would give me flexibility to respond to the price trends of tomorrow, which I'm not. I'm not. No one's told me what's going to happen tomorrow just yet. My friends, Hugh Hendry, the Asset Capitalist. We have another show. We have Mark Spiegel, who has been prolific, much to say about Tesla. He's a short seller. He's a value guy. He uses a lot of language which, in my Buddhist reformation, I buckle under. The objective of these shows is that it's the idea of participating in a debate between protagonists, that we're sitting there in a bar and you're overhearing it. If you've got comments, if you wish to participate and keep the dialogue going, drop it down on the messages. Show us love, show us sarcasm, show us anything. Just don't show us, just don't ignore us. You can find me on Instagram, Instagram, Hugh TV. Hugh Hendry official. You can find me on Twitter. I have no idea what that address is, but I think you'll work it out. You can find me on YouTube. You'll find the show on YouTube, Hugh Hendry official. You'll find this show on the major podcast platforms. I believe the Apple podcast channel is like the S&P. You'll find us on Spotify. Is Spotify NASDAQ? I'm not sure. We're prolific. We're out there. We love you. We love debate. We love the many ways that you can skin a cat. So I hope you enjoy the show. Let me know. And so I guess, Mark, actually, coming at this rather ambivalently, this is just this wonderful platform where I get to engage with amazing minds and just talk about this crazy fucked up world that we observe every day, the insanity of it. But perhaps you could help me with my ambivalence and just tell me a little bit about you. I mean, let's talk about you. I'm fed up talking about me.
Well, first of all, I want to tell you how honored I am to speak to the guy who advised me to panic. Recommended. By the way, that quote has to go in some form on your tombstone, right? I mean, I have a suggestion. It'll be like Hugh Hendry, and then underneath you write, "It's too late for me to panic." I think if you throw that on there, because I actually looked. I don't know if you even know, but you have a pretty long Wikipedia page. I was curious. I looked yesterday, and that's like multiple paragraphs on the. That line is just going to go down in history as one of the all-time greats. So to answer your question, I run a small, long-short, value-oriented fund. I opened the fund in 2011. Before that, I spent a number of years as an investment banker on Wall Street. And before that, I had an entirely different career in commercial real estate. So that's basically it. My mandate is value anywhere. I started really emphasizing sort of micro cap and nano cap value, but I haven't found much value there lately. So I've done some large cap stuff too, and we also short a lot of stuff, which last year was fantastic. The year before was good. This year, the first 3 days were fantastic, and now it's awful. So that's it in a nutshell.
Yeah, I mean, I came to renounce shorting as a waste of time. I had a fund for 15 years, the Global Macro Fund. And when you looked at the attribution it was a constant loss center. Now, you could say it was risk mediation and it permitted you to have other positions, but it was just persistent. Maybe I'm just bad.
Well,
but yeah, no.
I mean, shorting work. Obviously, markets go up over time, right? When a bubble is bursting, that's when you want to be short, as I was last year. And when it stops bursting, obviously, you just, if you don't find value, just don't do anything. Stay in cash. I mean, the one lesson I learned. I mean, we had lost a lot of money short Tesla until we made it all back last year. Of course, now we're losing some again. But people would say, well, what did you learn from the Tesla experience? And you must have learned something. They were asking me this when it was going up 20x on me, and my answer was always, I haven't learned anything here because this stock checks every single possible box, red flag for a short position, and it's a 1 in 10,000 stock, and if I said, okay, well, I won't short a stock that checks every box, then I'll never short anything. But on the other hand, 9,999 times the short will work if it checks every box. That's what I used to say. And now I've modified that to saying that, but when central banks are printing money, when there's QE going on, do not short fucking anything. And that's what I learned from Tesla going 20x on me. Just don't do it.
Well, I think you attribute too much importance to the central bank, but my take on it is, again, I'm going to use this word of the day, ambivalence, that despite all the cautionary red flags with Tesla, that such has been my long career, that I recognize when to fight and when to desist. That I had a very formative experience where I had invested. I had the investiture in the analysis, believing that was everything. And actually, I've come to see that there's a conceit and an arrogance that because you have this investiture, that somehow it gives you an edge on what will befall tomorrow, and it really doesn't. And so I'm curious about your tale with Tesla, because it's now, Johnny, hindsight, but it now does give off the smell, the odor of a short. But you were putting your intellect against a formidable trend, and for me, that's just, why would you do that?
Well, so the reason it had a formidable trend was because money was free, and so that circles back to what I said 2 minutes ago, which is, in hindsight, I would not do it. But if we were in a normal environment, I'd do it. I mean, now I don't know why the stock's up today. I mean, I do know why. It's call option gamma, that's driving this thing up. It's traders have gone crazy on everything, like, sort of all the junk stocks are up today. But certainly on the earnings report the other day, I mean, I'm not going to go too far in the weeds on this one company, but let's just say earnings will be down 30% this year. Margins will be terrible. And it still has a PE of like 60 right now, based on what earnings will be this year. Microsoft doesn't have a PE of 60, right? Google don't. I mean, those are real tech companies, right? This is just a one-off cult stock. Here's another mistake. I didn't think it would be possible for a cult stock to support a market cap of $1 trillion. All right, so that was the peak. But even today, the market cap is $600-700 billion. I didn't think there was enough, call it dumb money buying power out there, but apparently there is via the options market, and that's what's going on. I mean, we made a lot of money on it last year, and in hindsight, should not have done it when money was loose. But again, you shouldn't short anything. I have a really, really smart friend. He's an MD, PhD. He's long short biotech, but mostly short. And he almost never misses a clinical trial outcome. And, if you do biotech, you want to take a position ahead of a trial outcome. Normally a small cap biotech company, the drug misses, stock would go down 90% the next day. I mean, 80%. That's what happens. You've seen it, right? During the QE era, it would go down like 15% and then close up on the day. It was just free money mania, and it was incredibly frustrating for that guy. So that's the answer. Don't short anything when money's cheap.
I still want to push against you on the free money. You you get formidable trends with narrative, unique narrative that occur periodically over time, and you just have to be wise to not fight trends. So tell me, when did you engage? To understand the man, I'm looking at the chart. When did you start engaging your short position? At what price levels?
Well, so I first had a medium-sized position. I had a tiny position, not meaningful, like late 2013. I put a medium.
Okay, so hold on. So yeah, I was a professional investor. Okay, so these are all silly terms. Okay, so define a normal risk position for you, please.
Okay, so a normal risk, an average position for me would be like 10% of the fund. Normally on a
10%.
short position, normally on a short position, I normally wouldn't go more than 10%, sometimes 5%. I had on Tesla, I don't know, I'm going by memory, maybe a 1% position in 2013. In about
2013.
Yeah, about halfway through 2014, when the stock really took off, I took it up to probably a 15% position. I said, okay, normally I'd make this 10, but it checks every red flag. I'm going to make it 15. Go ahead.
Okay, so so with my development, I came because I am a raging, arrogant idiot. I had to temper all of that by looking at charts.
So Hugh, to your point about momentum on the chart, so yes, I would take shots at shorting the momentum, but I would also set an upside stop, right? And so,
no, quite, yeah. But that's again, so just so we can get continuity on, because we had that breach, and then we can bring you back in, and just so that you can speak to it. The beginning of 2013 was a significant breakout for Tesla, and it went from something preposterous like less than $3, and it went to a high of 18. Let's call it a range of 18 to 25, and it traded there between 2014 and 2020. And so for me, I could imagine, given that sideways, so it's losing momentum, and there's a very clear stop loss on it, the previous high, that would, it could be painful trading it back and forward, but it would be contained. And then we get to 2020, and it explodes. It takes out the 25 level, and it goes to the absurd highs. Okay, and it is for 2 years. It has a profound trend. We just can't be there. So that's how I look at it. That's how I never commented on it. People would get really angry. They would tell me like how absurd it was. And for me, I was ambivalent because, and don't tell me it's monetary policy. I don't care. It's trending. Yeah. And you never mess with the trend. But
I'm just,
I think,
it's a trend. Go ahead. I'm sorry. Yeah.
No.
And your point is well taken. Maybe I shouldn't have messed with the trend, but I was just.
You did mess with it. You messed with the trend, but you started 1%, which is fine. You were cognizant of perhaps the trending dynamic. Tell me when you took it to 10. I mean, just give me some of the points in that journey. So,
right,
it began, you said, in 2013.
Right. So the 1%, I wasn't thinking about the trend. I just didn't quite know the company well enough, and I hadn't found all the red flags. Okay. But then as I realized what a pathological liar Elon Musk is, and the fraud compounded. I mean, 2016 and 2017.
Do you think it's a fraud? It's emotional language.
He has a video. It's still on the website about full self-driving that says this car is driving itself. The driver is only here for safety purposes. Okay. It was proven in 2017 that the video was fraudulent. It was spliced together by like a whole bunch of different trips to make it look like one trip. And a story broke on some websites, and nobody gave a shit. Then it broke. Then it came out again in the New York Times in like 2021 that, hey, they faked this video, it was fraudulent, nobody gave a shit. Then it came out again last week from Reuters, or 2 weeks ago, coming again because the guys who made the fake video testified in court. Yeah, Alon told us to make a fake video, and they did it, right? This is fraud. This is no different from.
I don't think you. I'm sorry. I'm pushing back again. I don't buy it. I do not buy that. I don't buy that statement.
Do you think Elizabeth Holmes was a fraudster?
And she's in prison, and I want to talk about which is the guy who did the thing with the electric truck, and they had it on top of the hill.
Do you think pushing the truck down the hill and saying it was running under its own power? Do you think that was a fraud?
Yes. So in those two instances,
but you don't think making a fake self-driving video but saying it's not fake is a fraud?
I call me naive, but I think the legal system works, and we have two instances where there was fraud. There was a judicial process, and it was proven without doubt there was fraud.
Okay, let me ask you.
And so well, hold on a second. But there are legal details which you are not close to, right? But you're making allegations. I am not here. I'm not a sympathizer. Like Elon's just entertainment, and I've not got caught into the dynamic of fighting trend. Okay, but for me, it's the purity and the clarity, and like for people watching this, there's a lot of people beginning this journey that might take on these trades. I think you're on because you've got very valid things to say, and I want to hear them. But at the same time, I want the audience to know that when you say something and I really disagree, then I come back at you. So we've got two instances of fraud. Fraud is something where the legal system advances it. If the legal system has not advanced it, to my mind, I would advise you not to use the word fraud.
Okay, so if I shoot you dead and they decide not to prosecute me, I didn't murder you?
Yes. Yeah.
Yes, what?
You did not murder me. If that is a legal term, then that was given weighty consideration by reasonable people who judged it not to be murder. I can't have a retort to that.
So the legal system is never wrong, or just omits, doesn't. One of the great mysteries about Musk is, and the solar tiles were another one. He went up there, he said, these are great solar tiles, they're working. Afterwards, it came out that they were fake solar tiles, right? So
were they fake? Were they fake, or was it that they were advancing technology? They had an assumption. It didn't come through.
If you say this is a solar tile and it's really just an inert piece of plastic or plaster or whatever the hell it was, you don't think that's fake? I mean, are you incapable of judging whether somebody is lying unless he's been proven in court to be lying? You don't. I mean, when the New York Times or when the Wall Street Journal broke the Elizabeth Holmes story, had all these witnesses who said, yeah, she faked all this data and it was fake data, and she gave it to Walgreens and said it was real data. You didn't say that's fraud. You said, oh, I'll wait to see if they bring her to court, and then a jury decides. I'm not capable of saying that somebody makes fake data and 6 witnesses corroborate it. I'm not going to call that fraud.
Yeah. Well, for me personally, my code of conduct, I'm not the first person that throws the stone. Okay. I have to, like, my P&L doesn't lie. Okay. My P&L doesn't lie. So for me, they're just things which don't lie. Okay. And I just have to believe in justice. Can justice get it wrong? Yes. But when all of the forces which are invested in justice do not bring those allegations forward, and there's been a considerable amount of time which has passed and they've not been brought forward, what if I get closure on that?
What if you give big contributions to Congress people? What if I'm just throwing stuff out there. What if you own a satellite system that the Defense Department needs? What if you had a videotape of the Attorney General having sex with a dog? I'm just throwing stuff out there, and so they don't bring charges. Are you saying that it's not fraud just because he wasn't convicted by a jury, even though you've seen the evidence right in front of you? I mean,
well, but to my mind, you are judge and juror. I don't think we're going to agree on this, and I think But I do not like conversations where we call people frauds and bad people, and attorney generals are having sex, and we got videos. That's not the world of asset capitalism. Now,
All right.
I mean, that might be having sex with whatever is maybe my world in private, but this is all about
Throwing hypotheticals out there.
Well, quite, but it's just we've got a wonderful reality. I mean, we have this absurd reality where this, like you say, the stock attained a market capitalization of what, $1 trillion. Yeah. So and what the revenues forgive me, the profits and the results just reported. So that'd be for the closure of calendar year 2022. Yeah. Revenues were how much? Again, this is where I am. I mean, just tell me, revenues were what?
Well, earnings were about $4 ballpark. I don't know.
No. So again, let's think about just the real world. The total sales of Tesla were how much?
I don't remember. I can look it up. But it's...
Hold on a second. You've been short Tesla, and I ask you what the revenues were last year, and you don't know.
Explain to you why it's irrelevant.
Please.
You
can try.
I know what the earnings were, and I know that they just slashed prices to the point where the earnings get slashed terribly. Okay, car companies don't. I'll tell you this: car companies trade on half a turn of revenue, and Tesla's a multiple of revenue. I'm much more interested in the earnings than the revenue.
Again, so I'm philosophically the other side of you. Like, earnings are just an abstraction. Okay, the one thing you
want to talk about free cash flow?
I just the one thing which is not an abstraction is you sell a widget, you sell it for a price, you do it for a year, and you have revenue. Okay, and
you sell it at a loss.
The first staging point is, let's just determine how many of those widgets did you sell and at what price, and let's have the revenue.
I like you don't to the chase and see if you're making money selling widgets. To me, that's more.
How can you not? I mean, now I've got to look it up. How can you not know Tesla's revenue from last year?
Because what matters is the margins and the earnings to me, not the revenue. Do you spend revenue if you own a company and go to the store to buy a house or groceries or whatever, or do you spend the earnings?
So obviously I don't pay for anything, so I'm only looking at 2021's revenues, which were $54 billion. I imagine revenues, what would you imagine? Revenues last year grew year over year, they were up how much?
I don't know, probably 25%, 30%, something like that.
Okay. So maybe revenues are 65 billion. And the market capitalization today is how much?
3.2 billion shares times 175 as we speak.
So 3.2 times 175, 300. So we're talking about, let's call it $550 billion market capitalization. So,
okay. Yeah. Okay.
Yeah. Okay. Cool. Okay. And so we're saying, and I don't think it's substantial debt or net cash. So we'll kind of just keep it price to sales.
There's some net cash, but it's in China. It's hard to get to. Go ahead.
Okay. Yeah. So we're talking about it being almost 10 times historic sales and maybe falling to 8 times revenue. And that is the flag, because we know that automobile companies struggle to earn operating margins greater than 5%. And I think you alluded to, owing to that, for an investor to make a commercial return from an investment, they would trade rough. When people are enthused by the cycle, perhaps they might trade at 50 or 60% of those revenues, 0.5, 0.6. But Tesla's trading on historically roughly 10 times. And therefore the debate is, can Tesla grow into a revenue of $300 billion, $400 billion? I mean, that's really what's been firing this thing. So the revenue is really very, very critical to this. You get a pass. The investors will subsidize you if you tell them, look, help me, right? Don't expect me to make profits, but I think I can take this platform and I can get revenues up to $300 or $400 billion,
I don't.
and then we'll
Okay.
and then we'll talk about profits. Now, I'm just saying that's the narrative. So then push me back on how impossible it is for them to get to $300 or $400 billion. I mean, the first point would be, what are global automobile revenues? Do we know that figure?
What's $400 billion divided by a $40,000 ASP? Let's say.
Yeah, that's a good question.
Is that 10 million?
10 million units. That sounds. Don't ask me numbers. I'm just a retailer, but
yeah,
it's 10 million, right? 10 million, right? And how many cars are sold? I know that in China they sell 20 million cars.
No. So last year, let's talk run rate, okay? Because it's a growth stock. We should talk run rate and sequentials and quarters and all that stuff. I mean, it was allegedly a growth stock. They sold 400,000 cars in Q4. Okay. This year, according to their own guidance, which they always miss, by the way, they will sell 1.8 million cars. Okay. But here's the problem. Last quarter, they had reasonable margins. Okay. This quarter, they slashed prices by an average of 12% versus last quarter. If you slash prices on a car with a gross margin of 21% by 12%, you've got a problem. And the problem is, at the end of the day, they will sell 1.8 million cars, maybe 2 million cars this year, and they will sell them not at the former great Tesla margins, but they will sell them at like General Motors margins. Okay, General Motors, which I happen to own, by the way, sells at 5 or 6 times earnings. Okay, Tesla is now growing unit sales by slashing prices. It's just another car company and deserves a car company multiple, not a sexy tech stock multiple. I mean, that's it in a nutshell.
Which may be the case. I mean, I've gone in and I haven't asked Google, because Google is an invasion of my privacy. So I've asked a website which doesn't invade my privacy, and it's told me that car sales kind of run between 65 and 75 million units per year.
Oh no, I think it's bigger than that. Worldwide?
Well, the number of cars sold worldwide.
Yeah.
65.4 million last year. And that's credited to Statista. I don't think that would be trucks.
Well, I don't mean trucks, heavy trucks, but like SUVs are considered cars now. Yeah.
Well, they're using the term automobiles.
Okay. Yeah, you're right. Okay, good. Yep, that's the number. Okay, fine. Yeah. Toyota's the biggest. Toyota sells around 10 million.
Okay, so the Tesla valuation was predicated on it actually having, I would imagine, is it a software construct? I mean, Nokia was the largest telephone company, or the largest company in the world. And it almost no longer exists. It certainly doesn't exist in the world of handsets, because something came and radically rechanged the model, which again has been the trading presumption. Now again, it's like, these are just, I am not buying Tesla. I would be very wary of Tesla at these levels. I could imagine that Tesla could go all the way back to from once it came. But we're just trying to engage in how difficult this business is, and how we just have to be emotionally in control and not become whatever. We have to be ambivalent. We can buy, we can sell, we can do nothing.
Yeah, absolutely.
But, so and how many sales units did you say they are doing? They're doing
this year. They're guiding to 1.8 million.
1.8. So if we were generous, we call that 2. And really, the valuation is predicated on them getting to on those sales going up 5-fold. And that feels a risk.
The valuation is on those sales going up 5-fold at increasingly high gross margins, and just the opposite has happened. I mean,
it's presently happening.
Yeah, if you engage with a Tesla bull, once you whip out the financial statement and you're calculator, they are completely lost. They just tune out. It's a cult stock.
Oh,
I just
okay,
think
but this is
stock this big.
well, again, but you're using names. You're just like just try and be just coldly rational, right?
Okay.
Cult, and it just doesn't help. Doesn't help.
Okay.
Doesn't help me, and I don't think it helps. Like kids who are entering this business would be my judgment. So you're short the thing, and so if I was short, I would like I would be able to say to you, boom, right? The bull case is this. So tell me, what is the bull case? What is your opponent saying to you?
The bull case, Tesla will sell 20 million cars a year at 30% gross margins.
So not even 10, 20 million.
Yeah.
So that would be, that would be what, 25% of the global car market. So that really is, if we say that worldwide car sales are 71, but they're anticipated to be 71 million, roughly 25%.
Yeah.
Wow. And that's never happened. So Toyota is the most successful in terms of selling cars, and it sells 10 million. But again, the argument would be, that was, Nokia, Toyota, kind of the same thing. Tesla is the Apple iPhone, and we're going to go from 10 million units to something profound.
Well, there's something else to keep in mind. Okay, if you use Q4 as a run rate, okay, Tesla is only guiding to 11% unit growth this year versus that Q4 run rate. Okay, you're not getting, and that's only with average price cuts of about 11 or 12%. So, if you're growing 11% and you had to cut prices 11 or 12% to get there, you're not getting from 1.8 to 10 million very quickly, if at all. Okay. And now, if I look at Toyota, give me a second here, as long as we're doing this exercise.
Mm-hmm.
So the market cap of Toyota is $200 billion, selling 5 times as many cars as Tesla. And by the way, growing at about the same rate. Maybe they're growing at single digits, not 11% this year.
Yeah. No, the other side would still retort that, there are products which completely change all of the dynamics. Again, it just comes back to Nokia was dominant like Toyota in terms of market share units, and then Apple came from nothing, and it didn't go to Nokia's reach. It went to 2/3 of the market because
I agree.
I'm not saying that's going to happen, but that's.
So let me ask you a question. Do you want to tell? And maybe if this is too far in the weeds, just let me know. But if you're the Tesla bull and you say that to me, I'm going to ask you, Mr. Tesla bull, tell me how the Tesla Model Y is better than the Hyundai Ioniq 5, Kia EV6, Mustang Mach-E. So 2 of those, I'll get a little bit in the weeds. 2 of those 3 cars are built on 800-volt platforms, which means they can charge faster. Tesla's built on a 400-volt platform. I won't go too far in the weeds. I'll say this. The Tesla designs have been bested by newer and better designs, built at higher quality and with nicer interiors. In other words, this isn't like the iPhone is Tesla and the other things are Nokia, whatever they used to call those flip phones or whatever. Yeah. The Tesla is now trailing edge in terms of consumer technology in its products.
The retort to that is the legitimacy of the market trend. And again, that's why I'd ask you not to come back with money is free and it's the central bank's fault. To my mind, how I've disciplined myself is, so you said, well, why is it not like the others? It's not like the others because there are literally thousands of independent people who are doing hedging, who are looking to make money, who are looking to short, go long. And the composite of all of that, it has determined a price trend which is so profoundly unique to one entity and it's not shared by others. Now, what I want to say to you is, so the shield that protects Tesla today is reflexivity. It's the trend. Now, if we take away the trend, this thing can go to zero, And so and where are we with trend now? So, yeah, So what are you? Are you on max risk position? Are you 10% of your NAV?
For Tesla?
Yeah.
Well, I took it up. I made it much bigger going into that earnings report. Although I'm going to have to stop out a chunk of that, at the close. If this trend continues, I mean, I do look at charts, right? So if this thing finishes on a weekly green candle at the high, yeah, I'll take a big chunk of that off, and when it breaks down again, I'll take another stab at it. I mean, I'm not blind to trends and to charts. And the reason I'm still in business, by the way, and we've had a good
because you're good. You're good. So I'm just pushed. I'm not.
No, I'm not going to say I'm good. I'm just going to say that the reason I'm still in business, having a short position that went 20x against us, is I had no problem stopping out on the way up and trying again $20 higher or whatever. And by the way, the chart you're looking at is post two splits. There was, I think, a 5-for-1 and a 3-for-1, just to put this in some context. So yeah, I mean, I'll look at the trend, but I'm not afraid. I'm not afraid to buck the trend, especially if I think there's a catalyst for it. Because otherwise it's really easy to get whipsawed, right? What happened? I mean, if you look at that chart, if we're going to look at a hindsight chart, and actually, I have a question for you. Maybe you can answer this question. Teach me something. Trend goes up, up, up. Trend breaks, right? And you're like, the trend broke. Now I'm going to short it. That's a recipe for getting whipsawed, right? Because I bet you can find 100 spots on a Tesla 10-year daily chart where the trend broke, and you would have gotten short, and whoops, it wasn't really a break in the trend. It was a minor correction. How do you deal with that if you do it your way?
Can I remind you? And I will try. I will answer that question. But you shorted something which went up 20x.
Yes. And I'm still here to tell this.
Sure. But that's it's not my business. There's no glory from that. I mean,
looking for glory. I thought I'm fundamental position.
It tells you that you were horribly wrong
about the fundamental.
Now you might
the stock.
No. As a speculator, you were
as a what?
As a speculator, as someone appointed. What? Of course you are. You're short. You're long. You're a speculator.
I decide what I think a company is worth, and if it's a short position, if it's worth a lot more, I bet against it. I mean, you can call that speculating. Look. There's trend following, which is fine, and then there's I don't let the chart. I do use the chart for entry and exit points, but I don't let the chart tell me that a $100 billion company is worth $5 billion or whatever. I'm making up numbers there. So,
yeah, of course,
there's two different philosophies in the market, right? There's a lot of ways to make money in the market. There's quants who trade by the millisecond, right?
Sure. Until there's a time machine and we can visit tomorrow today, you're a speculator. Regardless if you're looking at trends, you are doing a deep dive into fundamentals.
Okay, all right.
You're investing your opinion in an event which is yet to happen.
Okay.
So, but you asked me a question, and I would try and answer it. So, anything is better than being short something that goes up 20-fold. I mean, that's just an obvious, self-evident truth. What you're looking for these things, there's an established pattern where they peak, they crack, they fall, and then there is a tremendous rally which fails to take out the high, and that's when you come in and you try and short. Okay, so and if we look at this thing, Tesla had a big correction down into the lows of the summer of 2019.
I'm going to pull up the chart. Give me a second.
Yeah, you should pull up.
A daily chart or a weekly chart?
I look at the maximum amount of data. I don't want to get lost in the data.
I pulled up a 5-year weekly chart. What year?
Yeah, I'm looking at 5 years. So I'm saying to you, so shorting, you would be looking. So we went from 25 all the way down to 11. More than halved.
What's the date? What are you looking at? I'm sorry.
Late 2018 into 2019.
Okay, hang on a second.
Okay. The stock halved.
Hang on. I'm sorry. I just blew up the chart. Hold on a second. Okay, late 2018 into 2019. Yes, right. Yes. Okay. Yep.
25 down into 11, 12, 50% correction.
Yep.
Okay. So I'm not short. I'm not short, but I'm going, ooh, I'm now interested because I'm going to speculate. I'm looking for it to rally close to the previous high. So Johnny hindsight, if you will, but I'm coming into late 2019 and we got pretty much close to the high and I'm initiating a short there. Right?
Okay.
Makes a new high. Boom. I'm out of it. I was wrong. Okay.
You mean the next week, basically, you're looking at that red candle?
It made a new high.
And then it broke down.
It made a new all-time high. And it went from 25 and then it doubled.
Whoa, I'm sorry. I'm sorry. I thought we were in 2019 at the $11. Tell me where you got short.
So for clarity, I'm run about March 2018. The stock has peaked at 25. I'm going forward to when is that? 610 October 2019. I say October 2019, but sometimes the European US convention with the day and the month is the other way around. But there was a clear halving in the stock in the period 2018 to 2019, where we went from 25 to call it 11 or 12. Okay.
Looking at the 1180. That was the week of
there you go. There you go.
Yep.
And so what I'm saying is, I am looking for a substantial rally that takes me to the proximity of the previous high.
Okay.
The previous high was 25, and so we have to fast forward to November 2019.
Okay. See what you did.
Okay, and I'm saying so. Okay, so I'm thinking, yeah, this is an easy. There's no such thing as easy, but there's a very, very obvious stop loss on this thing. Okay, which is if it makes an all-time high, then I'm zero in terms of my knowledge of this thing. Okay, and it does that. So I got no short position. The stock doubles because this is Bitcoin. Tesla was Bitcoin. It was a trend with a 50% vol. I mean, that's what the Nasdaq bubbles are like that. They're profoundly trending, but they have vols of 50%. So you get 50% reductions. Okay. So again, it goes from 25 and it goes all the way now. So it goes from 50 to say 25. And again, I'm looking for a substantial rally, which we get, of course. We're now into the beginning of, I guess we're into post-COVID, whatever. It makes an all-time high. Okay. We're not short. And we continue. Now, that trend, let's fast forward. This is very boring. Let's go to late 21. We got the all-time high. Again, the stock halves. And then there's a substantial rally and it fails to make the high. Now I'm short. And look at that. I've not been called. It falls and now it hasn't made. Now I've got one high. I've got the absolute high. I've got the rally high. I've got the second failed rally high, and we're in the midst of doing the third rally high, possibly failed high.
So you had a failed rally. Let's go. November 8th, that week, you had a giant red candle coming off the all-time high. Okay. Now you're waiting for the rebound. Tell me where you short it. It makes an attempt to take that back the week of November 22nd, and you short it there. Where do you short it? What was the failed rally that got you to short it?
Well, we went from about $430 down to $230. So we had a 40% price correction, very much in keeping with the.
But I guess what I'm saying is I see a lot of red candles between the all-time high in November 21 and let's say January of 22, any one of which were an attempt to take out the high and failed. But then it was pretty easy to get whipsawed there. And then it was easy to get whipsawed. You had a great downtrend, but then it turned around on you and shot up in March of 2022. It never took out the all-time high, but you went from 250 to to 385. So where did you cover there, or did you ride it from 250 to 385? You see what I'm looking at?
I mean, this can get tedious for the investors. And I wouldn't be. I think you're obsessing about the red candles, and I understand that because you'd be running risk. But the profile, the nature of the trend beast that was Tesla between March 19 and 2021, summer of the end of 2021, changed profoundly, whereby it has been unable to make new all-time highs. And it's beginning, if we were to push that onto monthly data, it is beginning to look like a classic short, where the all-time highs remains unchallenged. And what is the name of the stock? The one I mentioned, the truck one, where the guy's about to be sentenced
Nikola.
Monday.
Nikola.
And what's his code?
NKLA.
NKLA. Nikola, right? So I'm going to, and we'll paste these things onto the show. Yeah, I mean that's, it went from $100 to $3. And there's a great chance that Tesla might do that. I mean, it sounds like Tesla ultimately, unless it has invented the iPhone, the automobile version, then is going to trade at best on 1 times revenue, and that might be 35 billion, and it's trading at 570. But we'll bring up the Nikola chart, and you see that's an unusual one, because there was no recovery. It just went boom, 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 down. There's a chance that Tesla does that. Let's tell me about something because that's another contentious term you used, value. Value is something I really push against again. It's a normative value judgment. But tell me something you really like and why you really like it today in today's market.
On the long side, obviously.
Yeah.
So I'm long big auto, traditional auto. I'm long Volkswagen. I'm long big position in Volkswagen, big position in Stellantis, smaller position in General Motors. I'll talk about Volkswagen first, because you can look at it a few ways. One way you can look at it is it's selling at around 4 times earnings. Okay. And people would say, well, those were peak earnings, but they weren't, because all these car companies could have sold 20% more cars than they sold. They had supply chain problems. So they were really sort of like strong mid-cycle earnings that I'm working off of, not peak, never gets better earnings. And, I think the multiple on that should be 8x or 9x, or maybe 10x, not 4x. The other way to look at Volkswagen is, this, and here's an interesting way, and this is sort of classic value, okay? Volkswagen owns 75% of Porsche, okay? Porsche's market cap, I'm not looking today, a few days ago, was about $95 billion, ballpark, okay? If you just subtracted the Porsche ownership from Volkswagen's market cap, you got all of Volkswagen, and again, these numbers are stale by a week or so, you got all of Volkswagen for about $2 billion, all right? What are you getting there? You get Audi, probably worth 30 or 40 billion. You get Skoda, you get the Volkswagen brand itself, Golfs and Jettas and all that stuff. Point is, it's an incredible sort of sum of the parts value deal. That's why that's my single largest long position. So cheap on earnings, cheap on this giant Porsche ownership. And by the way, the Porsche valuation is not crazy. Again, going back to last time I looked, a week or two ago, Porsche is selling for around 15 times earnings, but it's got phenomenal margins, like by far the highest margins in the auto industry, other than maybe Ferrari. So, that's a compelling case. Stellantis is compelling because, again, it's selling, or it was last time I looked, at less than 3 times 2022 earnings, which, as I said, estimated. They didn't report yet, which were not peak earnings. I pick those, and that's fine.
Hold on. Again, let me just. I detest price earnings ratios. It's just such an amateur for me. No, I don't mean for you, but it's such an opportunity to make mistakes when you go down the rabbit hole of price earnings. I don't know any major hedge fund
You could look at
manager.
cash flow. It's cheap on those multiples.
Yeah,
You know?
I mean, tell me anything but
Okay.
bloody price earnings ratio.
And
It is.
Well, they're cheap. I don't know the
You
numbers.
sound like a Wall Street journalist or something, or like a Financial Times journalist. We don't talk about price earnings ratios. Secondly, let's really. Porsche is a good valuation. I've got a good.
If I may interrupt for 1 second,
Please, yeah.
I know many billionaire investors, including one who's one of my LPs, who talks about price earnings ratios all the time. So, value investors. But go ahead. I didn't mean to interrupt.
No, quite. No, you're quite right. Any idea of Porsche's market cap?
Yeah, I think last I looked, it was about 95 billion. I'll tell you right now. Hold on a second. The symbol is very easy, by the way. The symbol is 911 .t, I think. Wait, what? That's the wrong one. All right. Sorry, hold on a second. 911.de, at least on this thing. So the market cap is was about 95 billion euros the last time I got.
Okay, and it does revenues of about 100 billion, yeah.
Hold on a second. Hold on. It's 106.2, and I think they actually made, if I remember right, 911 million shares outstanding. They really played up the 911. Yeah, it's about 97 billion euros, if this is right, ballpark. So yeah.
And we don't know the debt, but we're going to say it's on 1 times revenue. And okay. I think if we looked at Toyota, I think we'd find it's maybe on about 0.3 or 0.4 times revenue.
Huge margin difference. Porsche,
huge margin difference.
Porsche net margins, I think, are close to 30%. Do you ever, just for fun, I don't know if you're a car guy, do you ever price out a Porsche online? What they get for the options, and people option these things up? It's just ridiculous.
Very much. But am I not also right in saying that revenues for Porsche have been pretty much 100 billion for the last 3-4 years?
Don't know. I can look. I don't know. The only other thing I'm long is a tiny micro cap, which I don't really like to talk about in public because I don't want to steer people with $30 billion company. Okay. And then GM. Okay. That's all I'm long.
Oh, GM.
I'm long GM. Gold. You want to talk about gold?
Let's just do GM for a second.
Okay.
Because GM, I know, is the stock. The car business is defunct. It just doesn't work.
Why do you say that? I mean, what do you mean by throw off billions of dollars in free cash flow? So how do you define defunct? I mean, there's some multiple worth paying for free cash flow, right? Assuming it's not a, what's the word? A cigar butt company. It's not going out of business,
At best, GM is a government bond.
Is a what?
And the price is a government bond. And and let's say interest rates don't change, GM's going to be the same price forever. My crappy system's only given me a price of GM back until 2010. It's the same price. You can tell me, I'm pretty sure that GM's trading at the same price it traded at the beginning of the century. Could you confirm that?
So, well, they went bankrupt, and so you're not getting the same GM. Oh, beginning of this century, 2010. I'm sorry, I'm dating.
No, you're right. You're right.
Not decade, actually. Yeah. No, GM's gone nowhere lately. Here, so
which is testament to it being, again, this kind of ambivalent market that looks at things and has thousands of participants. They all have different incentives. Has decided that this is
I don't care if the market is ambivalent towards GM today. Okay, I see that as my opportunity.
Honestly, I don't. You've got to listen to the market at all times. So, Ford.
Okay, sorry.
Ford didn't go bankrupt. Okay, and Ford is trading at the same price it traded in 1988. Okay, it's telling you that as a business model, there are just much better things to do. Well, this is a hard way to make money.
First of all, you have to catch the cycle. Okay, so Ford traded at $25 a share in January of last year. Okay.
Yeah.
I would have been a seller there. I'm not a short. I'm not going to short it, but I would have, if I owned it, I would have sold it. Okay. Now I don't own Ford here. It's a little pricier than the others, but basically it would have been a double if you bought it in April of 21, right? I'm not saying you own these things forever. I'm saying you trade them. Right now they're too cheap for the cycle. That's what I'm saying.
Well, I mean, all I'm saying is, with stocks like that, there is, let's make this number up. There's 1,000 price observations, and there's only 25 observations that are the difference between losing money and making money. And so the idea that you're gonna consistently find and land on those 25 price points out of 1,000, kind of a flag. It's a challenge.
You have to understand why people are only willing to pay today, $38 a share for General Motors. Okay. And I understand why. Okay. I mean, I understand, and I think they're wrong. And that's why I own it. Now, I'm not buying more at 38. I'll buy more at 30. But, and I gave you one reason. Now, I'll repeat it. People are like, oh, it's coming off the cycle. Everything is going to suck from here on. And I point out to them, no, if it were a normal cycle, they would have made a lot more money than they did. They didn't have inventory. Okay. And the second thing I'll point out, the other thing is, Tesla's going to put all these guys out of business. And I'm going to point out that, they have this deal with LG and they're building battery factories and they have a whole platform and they're going to, start selling hundreds of thousands, if not millions of electric cars a year pretty soon. And they're going to collect, speaking of government, they're going to collect, big, fat, stupid government subsidies on all the batteries that they make. And their customers are going to collect big, fat, stupid government tax credits for buying their cars. And the stock's going to go up. And I know the bearish case. My opinion, what I'm saying here is if you understand why people don't want to own it and you can put together a logical case as to why they're going to be wrong, that's when I buy it. That's all.
I mean, to my mind, you might run it to 50 and there's a risk that the recession which is coming takes
50, 60. But the recession's priced in. Maybe not at 37, but at 30, the recession will be priced in. And I don't think GM is 10x. Okay, I think GM is 2x, and probably not 2x from 37. I think it's 0.7 or 0.8x from this price, which is also good upside. I'm not deluded.
No, I am. So my life, I took on Warren Buffett's advice. I'm a sloth. You're hyperactive.
Warren Buffett owns GM.
Warren Buffett doesn't own anything now. He's an old man with people who do things,
Right,
but
people.
I don't want to have to make the number of decisions that you volunteer to make. Okay. And that's the difference. And that's just personal difference.
I don't think I can make money just trading off a chart. I think it's too hard to get whipsawed.
No, I wouldn't. I heavens, that's not my message.
Oh, okay.
My message is that if you're left to your own imagination, and again the conceit and the arrogance of believing you've seen tomorrow, and you're committing yourself, like so just now you've committed yourself to Volkswagen. Volkswagen is trending lower. Okay, and so it's impossible for me to own anything. My idea is not being confirmed by my peer group. I respect my peer group.
Okay.
When I have a great idea, I want to tell people. And if the people go, I'm like, oh, bugger, I missed something, and I sit on the sidelines. So for me, when I have a great idea, it has to be in synchrony with the trend. That's all I'm saying.
I listen. That's a good way to make money, and maybe it's the best way to make money. I don't care what the market thinks at any given time. I care what people think just to hear why I might be wrong. And when I get long something, I do it with unless it's something, nutty like some gold where you just don't know what the hell it's worth. But on a company, when I get long something, I do it with a big margin for error, so I know I can't lose too much, right? And if I'm wrong and it goes down, assuming there's nothing wrong with the business, I will buy more. I don't stop out a long position if I understand the company and I understand the business and I've bought it really cheaply. Okay. Different philosophies. I mean, Warren Buffett did it. He's the richest guy in the world. He was until until Elon Musk got rich.
So, I mean, it's different. You
Yeah.
use a more emotive language than I'm comfortable with. But you did say you're big long oil. What are you long there? I think we'll find common ground there.
I'm sorry. I said I'm long some gold.
I thought you also said you were long big oil. I misconstrued that.
No, but there's nothing wrong with that, by the way. I mean, it's pretty clear to me that the price of oil is going higher. I just, for whatever reason, I've just never traded it, and I haven't bought oil companies. But I think it's absolutely a smart thing to be. They're still cheap.
So, okay, so gold. Let's do gold. Where are we? We're long a few junior miners, or we're long a Barrick Gold and Newmont.
Well, I'm using GLD.
You're long gold. You're long gold.
I'm literally long the metal, and the reason I'm long the metal is I don't know exactly what it's worth, which is something I'm never exactly comfortable with. But I do know that there's this incredibly massive amount of debt in the world, and eventually they're going to inflate it away, and eventually gold will move, and I don't know when. It's a 10% position for me, which is meaningful, but nothing I lose sleep over, and that's it. I mean, you know the reasons people own gold, and that's the reason. Now, by the way, I'm not a gold bug. If it doubled tomorrow, I would dump it. If it were cut in half tomorrow, assuming it wasn't cut in half because they found it on an asteroid and and could mine it for $5 an ounce. But if it were cut in half, over the next few months for no reason, yeah, I'd buy more because I think I know the end game. I just don't know the timing. I don't know how long it'll take to get there, right? And years ago, I thought I knew the end game on the yen, and the yen still hasn't really collapsed, right? So, it's a position. If I had something else to do with the money, I'd sell the gold and buy something else. But I think it's a decent place to park some money. I can't tell you about the trend, although it is an uptrend. I know that, but that's not something it's too easy for me to get whipsawed on gold. I've tried trading it off the chart, and it's hard.
What can I say? I mean, having got to understand your mind, your operating procedure.
You hate it. I'm not offended.
With no prejudice with regard to what gold might or might not do.
Yeah.
Your willingness to take a risk position here defies all the logic of everything else you're doing. Everything else you're doing, you have a clear, almost precise view of the worth of the entity, and your disagreement is with others because it's trading in disequilibrium. It's trading far removed from where you have judged it to where normal economic rules should take you to this level, and it's not there. None of that pertains to gold. I mean, you just agree with no idea what it's worth.
I have
what the hell are you doing?
I have I'll tell you, I can ballpark what it's worth. Okay. I'll look at a long-term chart, see where it based out for a very long time, and then add, CPI plus some number to that and ballpark it. And when I do that, I think the last time I went through that exercise, I think I came up with maybe the 1300s or the 1200s or something like that. Okay. So that is some kind of a methodology. Look, it's indefensible to earn gold. And going back to Buffett, maybe that's why he doesn't own it. But I just feel that at some point, I mean, you've got 5,000 years or whatever it is, 3,000 years of history there. At some point, when they need to take care of all this debt, and they do it by, QE 9, 10, 11, and 12, gold will take off again. I can't defend it. By the way, I did actually misspeak slightly about gold. because I will look at the chart, and if it starts to break down badly, I might lower the position. I'd probably trade that off the chart more than anything else, but I don't trade it back and forth. It's just too hard for me. I can't defend it beyond what I just said. I don't think it's a lot of risk. It doesn't move a lot. It's not like owning some micro cap stock that's going to be cut in half overnight. It's not like being short a Tesla that's going to be up 20% every day for a week. It doesn't move that much. I don't lose any sleep over it. That's my defense. It's not. I don't have a good defense beyond that.
You don't have good defense.
But try getting a good defense out of somebody who owns gold. They won't admit what I just admitted. Ask Peter if he owns gold. It's like.
Please, let's not ask Peter. I now feel like I've got a beard. Okay, well, let's try. I own gold.
Why? Tell me.
I own gold. For the reasons I think you were trying to articulate, that given the abundance of leverage, over leverage in the economy, that the reflation, how you try and encourage the economy, the GDP to grow faster than the debt levels, so that, if you will, financial repression will require negative interest rates, negative real interest rates.
Yeah.
And we got the vestiges of negative real interest rates in that period, 2019, and further encouraged by the initial emergence of COVID and the reaction. Since then, the price has pulled back considerably. It did have like a 35% price correction. So gold, there's an old saying in gold, you're making me old. It is something which will test your limits of endurance. And presently, with I would say that the follies of the Fed, real interest rates are now positive and punishing again, and that's why I believe we will see quite a severe recession globally, which is not priced into markets. And gold is interesting just now because gold effectively has gone sideways for the best part of 12 years. And it is tantalizingly close to making a new high. And indeed, in other currencies apart from the dollar, it has made a new high. And gold is just preposterous. And I don't think there's really many wise people. Individually, I don't think people are very wise in gold. Collectively, I think they reveal a wisdom which is saying the global economy needs the return of negative interest rates, negative real rates, not absolute levels. And that will be forthcoming. And when it's forthcoming, you're going to get a new high based on something which has gone sideways for 12 years. And typically that's explosive. And so if you look at the absolute price range in that period, it was $1,000. Went from $1,000 to $2,000 from the period where we entered quantitative easing, and presently we're in its opposite. And if it makes a new high, it's going to add $1,000. It's going to go to 3,000. That's the gold story.
Or it might be a percentage. It might go to 4,000 if it's a 50% move, right?
No, indeed. Well, it might get reflexivity. If it goes to 4,000, I can assure you it will be having 40% price drawdowns on the way up. It will not be an easy ride. So gold is a macro asset. Anyway, wow. Wow. That's what I want. I want to have intelligent debate with people who are actively engaged with risk management, which you are. You fought your corner, which I admire. And is there anything you want to tell us? Give me the hard sell on you. You're out there on social media. Tell me your handles and what are your ambitions? The fund is open. Do you want to talk about the fund?
Well, the fund is tiny. So we finished last year at about $19 million. That's it. It's a tiny fund. Follow me on Twitter, but it's a lot of the stuff you don't like. It's a lot of harsh, New York attitude and and calling out frauds if I see them. But my handle is at Stanfill Cap, and I'll spell that because that's the name of my fund is Stanfill Capital. It's STANPHYL CAP. That's my Twitter handle. I'm very active on Twitter because basically, look, I work from a home office here in Manhattan, and it's me and these screens and my ace analyst.
Well, well,
and so
it's a bit like me.
Yeah. So Twitter is my my thing around the water cooler, which I always did when I worked around people in an office. So I'm active there, and look, I thank you. This was a lot of fun, and look, I mean, the thing I'll leave with, because I don't want people to get the feeling that there was like all this friction between us here. Okay, good, but I just want to say that I completely respect the fact that there are a lot of different ways to make money in the markets. And it's important because, I recommend it. You mentioned you have people starting out who watch this show. Read all those books from Jack Schwager, all those Conversations with Traders books. I don't remember all the names, but they're easy to find, Jack Schwager, because he interviews scores of successful guys. Maybe, did he ever interview you?
I was too young.
Okay, well, he interviewed scores of successful people, and they all work on different time frames and different theories, and some of them do what you do, and some of them do what I do, and some of them are quants, which I will never be able to do, and some of them are bond guys, and I'm really an equity guy. So, you got to do what's comfortable for you, and do your homework, and not just, this is advice to the people you're telling me you're watching this for what it's worth. When I say do your homework, I don't just mean, read about the specific company and all the SEC filings, if that's the way you do things, but read a bunch of Wall Street history, because you'll learn that there's nothing new on Wall Street. There are new company names and there are new technologies, but it's the same kind of cycles and the same kind of crap. I mean, there's a great book out called The Go-Go Years by a guy named John Brooks, and it's all about the wild years, the bull markets of the 60s. And every time a company wanted the stock to go up, it would just attach Tronics to the name. Exactly what they did 30 years later by attaching .com, to the name, right? So there's just nothing new on Wall Street. So it's great to know the history, and you can say, oh yeah, this happened in the 60s, and here's how it played out. This happened in the 80s, 70s, whatever. That's my advice to anybody. I used to go, living here in New York, years ago, I used to go to the Strand bookstore, which is maybe the largest used bookstore in the world. And in the basement, they just had shelves and shelves of business books going back to 1900, the used bookshelves. I just bought every damn one I could find that looked interesting. I probably have 200 of them, if not more, on the shelves in the other room here. And I read them all. And you just learn that there's just nothing new, it's the same stuff reinvented.
But my ex-wife threw out all my books in a fit of fury. But yeah, no, you're right.
Mine would like to throw them out, but I don't let her.
I did. No, indeed. And I read those Schwager books. I read them with the torch under the covers. It was living the adventures that the capriciousness, the absurdity of life throws. And it's all, and you're reading about the people who survived the crazy times, but it's good to recognize, you're right, you've got to go back and see that really, really crazy stuff happens, and it repeats, but you have to endure the like John Maynard Keynes, the crazy stuff can survive your stop loss program, so
yeah.
No, so you're a warrior. I've done everything. I've made every mistake, and so I've become more a bit Zen-like, a bit Buddhist. But again, even with Buddha, the Buddha died, and Tesla may die. God forbid. Poor Elon. I love Elon just for his entertainment. Why not? The stock, however, he's lost the shield. He's lost the price trend in that chart, and he's very vulnerable.
except, well, if we're talking about the chart, what would you say about it? The stock is now roughly 75% up off its recent lows from last month. What does that say to you?
What it screams at me is, sorry, let me just put it back in.
Yeah.
I think it's 250 looks very, very critical. 250, which was a floor, now becomes the ceiling, if I remember correctly. Bringing it up.
Well, 250 is another, 40 something percent from here.
Yeah. So, I mean, I would be trying to have a maximum short position again, not here, but on the presumption. Am I right in saying 250? I'm wrong with 250. 200. So we're pretty close. I would surmise that if this thing is now in the doom loop, it might get to about 220 and then top a tail off and come back down again.
Can I ask why? I'm looking at the chart too. If you're looking at that 5-year weekly chart again, what do you? I'm just curious. Like, what are you seeing at 200 or 250? I mean, I see a 20-week moving average at 189. I see a 50-week moving average at 243. 100-week at 254. What are you seeing at specifically at 200 or 220? I'm curious.
Yeah. Oh, I'm seeing the lows of. Is it January 21? Roundabout. It reached a low of about 180 or so. I'm seeing the lows of.
Okay.
Of May 21. I'm seeing the lows of May 22. I'm seeing what was a low of October last year, and then it gave way and it really began to come down. So what was a floor? I'm approximating because I'm looking at the monthly data, but I'm saying a monthly close around about 200 was a floor for over 2 years, and typically I'd expect the floor to become the resistance.
And let's say you shorted it at 200, 205, whatever. Where would you stop it out?
Great question. I would stop it out. So 205 would be kind of uncomfortable because the stop out level would be too far away. So again, maybe I'd start with a 1% risk position if I was optimizing it at 10. I'd really want to get funky runabout if it got to 250, and I would stop it out, I don't know, 280 or something. I mean, really, I should say I would stop it out if. So what Tesla has done, okay, is since November 21, it has just failed to take out the high, and you've got a series of rallies, and each rally has been less powerful than the last one. So the last obvious rally was, and I hope I'm saying this right, was May 22, where we got into that 310 vicinity. If it can trade above 310, it's got a good chance of making the all-time high again. So I guess really for me, I don't want to really join this fight, but if I was run about 250 and I was willing to kind of build a position 250 to 300 and then have a tight stop at 320, that's kind of how I'd be looking at it.
So you wouldn't do it in the low 200s. You'd look for about 250, and then I see your stop there. Sure, there's a lot of congestion there, and that's how high.
Yeah.
Whatever.
Yeah. I'm just feeling. I like living in not in the Caribbean, but in St. Bart's. I like to live. I want to live long, and I'm not looking to overload and overstress myself, and I certainly am not looking to short things. But yeah, I mean, but I do. I mean, I actually do believe. I don't believe, but I would be prejudicial that somewhere around 220, I think would be. I'd be surprised if it trades much beyond 220. And I do share your. I'm not ambivalent with the valuation case that you paint. I can see how this thing. I would imagine the next major trading low would be 50.
Yes, I see the same thing too. But just to circle back a little bit, you said you'd be surprised, and I'm not trying to put you on the spot. I'm genuinely, because I don't talk to enough people who who look at charts. I mean, I look at charts. Most of the people make fun of charts that I know. So I run in those fundamental circles. So are you saying, let's say you were going to short Tesla off this chart, and I fully understand that you don't need the headache, so you're not going to do it. Where would you short this? Because you said 250, but then you just said you don't think it gets over 220. I mean, where would you short this off this chart?
I would short run about 220, but then it becomes a question of size, and so I'd be 220, but with reservations that that these gyrations can be wild, and so 220 can't be allowed to kill me because, like I said, it could maybe trade 250. So I'd be 220, and if it turns at 220 and it starts going lower, maybe I'd add to it. But I would also, if at 220, I'd want the opportunity to add to the short at 250. So 220 would be an initial staging post, which then would give me flexibility to respond to the price trends of tomorrow, which I'm not. I'm not. No one's told me what's going to happen tomorrow just yet.
So basically, you want to see if it takes out that late October high, I'm guessing, which is 237. You'd short just below that because that was the last major high, and then maybe you'd stop it out at the September high, which or whatever that high was, around 315. So it was August, right? Yeah. I mean, is that how you would look at this thing?
That is the most the 315 or so price trend is really the most significant. I think the change in the price trend, I don't think it will challenge there. But what I would say to you, if it takes out that 320 level, I'm saying it's game on for a new all-time high. It's game on for Tesla to be a $2 trillion company. Why not? That's the pivot point. But I don't think it will reach those levels.
Yeah.
So that's why I'd be willing to pursue my curiosity with small amounts of risk, around about that kind of 220, 250 region.
Okay, I see what you're seeing there. Sure, yeah. But don't even. My advice: just avoid it. Enjoy your island. It's not worth it. How is it worth it to get involved with a 1% position anyway? It's not. I mean, it's not even worth it, right? So,
indeed. I mean,
what's that?
If it goes bankrupt, if it goes bankrupt, I make 1%.
It becomes an intellectual exercise at that point. I mean, there's nothing I would waste time on to make 1%, right? And that's the best possible case. So,
Exactly. Yeah. And again, that is the bounded nature of the potential returns from shorting versus the unbounded potential losses, which I would not encourage people to go shorting stocks.
If you're talking to beginners or intermediates or whatever, I totally agree. And if you do short stuff, you stop. It's not unlimited if you keep it to whatever 5% and you stop it out at the end of every day and whatever. You're not going to lose anything, but you still lose a lot of money. I agree. Most of the time, it's not worth the headaches. Except, I'll tell you the one way, and let me know when we have to leave here. But it's something that you talked about actually at the beginning of this conversation. There was a terrific investor named Robert Wilson. You know who he was? He
remind me.
He compounded, he died a number of years ago, but he compounded whatever, tens of thousands into hundreds of millions of dollars as a growth investor, probably a GARP investor, really. But he became famous or infamous for some of his short positions, and the most infamous one of all was Resorts International back in the late 70s when it got the gambling license for Atlantic City. And the stock went from, I think it probably went at least 10x, maybe 20x on him. And he was on a round the world trip then, and there were no cell phones. So every new city he would stop at, he would get a fax from his broker. Oh, it just doubled, it just doubled, it just doubled. And there was a lot of talk about it. And eventually, I think he covered it at the point of maximum pain. And he still made money that year, even though that stock went 10x or whatever on him. But the point is, he said he always made the vast majority of his money on the long side, but he would have short positions because it would give him the confidence to have all those long positions. And you talked about that, the same way. So you maybe short with an index. And, Jim Chanos, if he still does it this way, he would pick individual shorts, or at least in one of his funds, and then be long an index against them, and look for the alpha that way. That his shorts go down more than the index goes up, and I think that's a perfectly valid way to do it. The problem in this bubble is that the worst stuff is what went up the most. So it's not going to work if that happens. When I say the worst, these companies.
Yeah, the worst, but the best narrative stocks are the ones that always go up regardless of monetary policy.
Yeah,
it's fun. Yeah. Because we should end, but I should recant. I was being unfair on your GM position. You on the long side.
I have a thick skin.
No, indeed. But I wish just to ensure that I'm delivering the correct message. Because you call it value. I don't like value terminology, but stocks that decline 50, 60%. And stocks can do that because there are stocks where the commercial economic risk is enormous and it can create that price volatility. And anything that falls to that magnitude, you really have to be investigating and really seeking to go long, but being very cognizant and asking a question: Has the business model changed? And it was funny because so there are great opportunities from businesses which are not necessarily stellar, wonderful, growth, GARP, etc. And I'm looking at. It made me just look at Facebook Meta. I was just curious because I know that's fallen. Yes, it's done like a Tesla. It went from 400 to 90, and you see the same pattern. It's rallied back into the floor could become the ceiling. I mean, there are very few stocks I'd own today. I think if I was doing a portfolio, I'd have 25% of my risk budget in stocks. I'd have 75% in the long treasury bond. Maybe I should reduce that 75 to 60, and I'd have 15% in your gold. Yeah, and the stocks I would own would be they would be of a commodity nature. They're the best looking charts in the universe.
Trying to reopen.
Yeah. Well, please.
Let me ask you something. Let me. I know we got to stop, but let's just go on for another minute if we can. I want to address 2 points. You said you got to look very hard at it, and you used GM as an example, which is fine. At a stock that was cut in half and figure out what's wrong and what happened. But the flip side of that is, was it twice as expensive because it was a bubble, and now it's where it should have traded the whole time. And I'm not applying that to GM, but sometimes something gets cut in half from a completely absurd level. Okay, so you got to look at that from two directions. And then to your other point, I do have a question. When you said you'd be 60% or whatever is long treasury bonds, how do you reconcile that with inflation and negative real interest rates coming? Is this like a timing call? Like you think they're not coming so soon? I mean,
I think everyone knows what's coming next. There are maybe 5 people in the world that actually understands money. I am very dismissive of the inflation. Inflation is a monetary phenomenon. I don't see private sector credit institutions willing to expand credit, and therefore discretionary spending is set to fall. And then I'm looking at Facebook, and Facebook looks as if it's going to trade at 50, and it reached a high of 400.
Now I got to focus.
And yeah, I mean it is almost identical to Tesla, and so I've got flags or voices in my head telling me that some of these major institutional must-own stocks are going to fall to incredible levels, and then there'll be buys, but they don't feel like buys. I don't think there's, like I say, maybe I could have 25% in equities today. I couldn't have 100%, and because of that.
I don't.
But then turn it on its but turn it on its head, and if we look at Amazon, I have in my 20% basket, I would own Amazon because that is just one of the greatest commercial enterprises ever conceived.
Wait a minute. So now you're a fundamentalist? Because when I look at that chart, it's not that different from the Meta chart. I'm not trying to put you on the spot. I'm teasing you a little bit.
No, I think it's profoundly different.
Okay.
But to correct you, I am profoundly fundamental, but profoundly cognizant again, of the arrogance and the conceit that comes from seeking to understand tomorrow by doing fundamental analysis. It is an enormously important step, but it's not the process. It is an ingredient, and not the totality. That's my point. And what are the other things? The other things would be charts, and the other things would be imagination, drama, and trying to conceive of the dumbest possible things that can happen, and the recognition that the market does not want you to succeed.
Oh,
you sit there and you can see the absurdity of Tesla's valuation. The market's like, you know what? I don't care what you think. I'm taking this higher. I'm going to squeeze you and squeeze you and squeeze you until you
I hear you. Yeah. So, look, I had a tremendous year last year, and the first paragraph in my end of year letter was, I'm paraphrasing myself, but it was basically, there's no way in hell I'm going to have another year like this. And, you know, as it turns out, I was right. I'm not having a year like that. But more importantly, the point is that the minute, and again, this is obviously not for any professionals, they know this, but the minute you think you're smarter than the market or better than the market, or, you know, you own the market, you dominate the market, it is going to cut
your head off. Exactly. Well, that's a great way to end. I've got to go. I've got a guitar lesson, which is meditation. And my God, you need meditation when you see what Tesla's doing today.
Well, you don't, but I do.
Yeah, I do. But I'm just tense listening to you. So yeah, I'm going to go play bass guitar. Listen, thank you so much for your generosity. And
I really enjoyed this, and thank you for the opportunity. And again, I'm serious. I'm very happy to have had a chance to talk to you, because I was always a fan of all your media appearances, and it was great stuff. And, you know, come back to this business. You know,
but remember, we're not even, the first month is not even over. So, you know, I hang in there, manage your risk, and this year could be even bigger than last year. Why not?
I've been through this a million times, and I appreciate you saying that. And the month is not over. There are still 3 more days to lose money. So,
exactly. Listen, take care, my friend. Okay,
thank you.
Okay, bye-bye. Well, there you go, cats. There's one way of doing it, Mark. We didn't really do macro. We spent too much time looking at charts. I'm not a chartist. If that was educational, it was educational in the sense that fundamentals, I don't think fundamentals are more than a third of the process. And I fear that it's not delusion, but it's the arrogance, the conceit, where you convince yourself that you know. Believe me, if something goes up 20x, your original premise just wasn't correct. Maybe that's just an intertemporal thing, and it's not a slide on Mark. But this is a tough business, and that's why we're doing this show for you kids who are beginning. The message is, God, be humble and have the flexibility to buy, sell, to have the flexibility to reject everything that you believe today, reject it tomorrow, so that you get a chance to play in the fountain again tomorrow. Love you guys. Maybe see you next week. Thank you.